The AI agent economy is going to be bigger than anything we have ever seen. They operate 24/7, 365, and they can open a crypto wallet and start sending transactions without any human being involved. In this video, I'm going to break down what the agent economy actually is and why AI agents need crypto to function and how this could actually directly affect XRP's price. So what is the agentic economy? Well, we have to define AI agents. An AI agent is an autonomous software that executes tasks without humans' involvement. It's not just a chatbot that answers questions, it takes actions. You tell it what you want done and it figures out how to do it. It can browse the internet, send emails, make purchases, and even send crypto transactions. This is why this is different. Regular AI just gives you suggestions. These LLMs, large language models, you ask it a question, it responds with something, but you still have to do the work. An agent does the work for you. Think about the difference between Google Maps telling you the directions versus a self-driving car that actually takes you to where you want to go. This is the difference between LLMs and AI agents. So what does this look like at scale? Well, these agents operate 24/7, 365. They don't take breaks. They don't sleep. They don't call in sick. The daily activity for on-chain AI agents crossed 250,000 in early 2026. That's over 400% growth compared to 2025. Gartner Research now estimates that AI machine customers could influence or control up to $30 trillion in annual purchases by 2030. More than 68% of new DeFi protocols launched in 2026 include at least one autonomous agent for trading or liquidity management. Up until this point, humans were the ones that were providing all of this value, but we're capped by human capital, the number of people on the planet. And there's only so many hours in the day. And we all have to sleep and we get sick and have families and all the other stuff that we need to do. AI agents completely remove that cap. They work around the clock without breaks. No sick days, no sleep, infinite capacity. So why is it so important that we blend crypto with AI? There's a banking problem. AI agents are software. They can't satisfy the ID requirements for a bank account that would be imposed on traditional holders or beneficiaries of those accounts. They can't open a bank account. They can't get a credit card. And traditional finance infrastructure, well, that was built for people. It's not built for autonomous agents or software. This is what Brian Armstrong has said. He stated that autonomous agents could drive the next wave of crypto payments because AI agents cannot meet know your customer requirements or KYC, and therefore they cannot use traditional banking infrastructure. Coinbase launched their agentic wallets in February of 2026 on their own X204 protocol as an infrastructure for agent native payments. CZ said AI agents will dominate crypto payments. AI agents are software. They can't satisfy the traditional verification requirements that banks impose. Crypto wallets require only a private key to open and operate. An agent that holds a crypto wallet can send and receive value without any human interaction or attachment. So what do these agents actually need to be able to do this? Well, they need programmable money. They need smart contracts that execute automatically when conditions are met. They need to be able to send microtransactions. Agents need to pay fractions of a cent for services. Traditional payment rails charge 30 cents minimum per transaction. So they don't work in this environment to be able to pay for API calls and all these other things that are required in order to operate at scale for AI agents in an agentic economy. And they also don't operate 24/7, 365. Banks are closed, markets are closed. Crypto runs 24/7, 365, never down. And there's also instant settlement. Agents can't wait 3 days for an ACH payment to clear. They need to be able to execute as fast as possible in order to be able to achieve their objectives. So what does this actually look like as far as the numbers go? Well, stablecoin transaction volume reached $46 trillion annually, up 106% over just last year here in 2026. Crypto settlements happen in under 500 milliseconds, and they cost less than 1,000th of a penny on some chains. Traditional payment rails make selling access to data or compute for less than 30 cents uneconomical because there's fixed fees, and those can range from 5 cents to 15 cents per transaction. Blockchains throughput increases 100 times in the past 5 years, from 25 transactions per second all the way up to 3,400 TPS. And that trend's not slowing down. I think that we're going to continue to see transactions per second expand rapidly here in 2026.